Good morning, everyone. Welcome back to the Stock Market Podcast from MPIinvest.com. Well, we had a holiday yesterday for Holi, and markets are opening back. And as discussed on Monday, the markets would be reacting to a lot of activities because the Holi holiday is only locally in India, and whereas the global markets were open yesterday. So if you look at what happened on Monday, on Monday we could see the stock markets actually opening with the gap up and then rising up, and then by end of day it did consolidate and fall, finally close to 17,700. So 17,700 was of course the important resistance that we had discussed, and it did trade between the same range of 17,700 to 17,800 as we had thought. But the only difference was the first half an hour, the rally was big. So one important thing that we should understand right now is the markets were in a beautiful rally mode, but a lot of things have changed over the last 2 days. So let us see what happened there. So after Indian markets closed, we could see the US markets opening and still closing in the green on Monday night. But after that, on Tuesday, that was yesterday, there was the testimony by Jerome Powell, the chair of Federal Reserve in the US, and that was a very important point to be focused on. So when he came out with this testimony, what he announced is that Fed is not seeing the rate hikes coming down. That is the first thing. Two, the rate hikes are going to increase further. That means, unlike last monetary policy where rate hike was set at 0.25%, this time there might be a 0.5% hike. So that kind of spooked the markets. And third thing, the total level of interest rate hike would be higher than expected earlier. So with all this, of course, finally, that important thing is there that all this is based on the data, economic data that comes out in the US. So we have a monetary policy coming up in March. So there are high chances now. The earlier expectation of 0.25% is gone, and now the expectation is about 0.5% rate hike. So this is, of course, something that gave jitters to the market. And continuation of this rate hike is something which made the market fall yesterday in the US. All the three major markets in the US fell by more than 1% yesterday, and almost Nasdaq was down by almost 1.6%. So the same effect can be seen in India. So in fact, yesterday SGX Nifty had crossed 17,800 also, and today as we see it has fallen and come down close to 17,700. So that means we are going to see a gap down opening today, maybe about 30-40 points. But however, we cannot judge that as on today the way the market is reacting. However, we would see a gap down opening for the day. So as of now, I would say the important support is available at around 17,500 on the downside, and on the top side 17,700 to 800 would continue to be the resistance. So I am basically expecting the market to kind of close within this range of about 17,500 on the downside, and on the top about 17,800. So again, if you look at the downside, 17,400 to 500 as a range is also a good support. So those who want to take safe bets on trading probably can take between 17,400 and 17,800, and that should be a safe bet. Whereas 17,500 to 17,750 would be a tight bet. So that is what I am expecting the market to kind of close in by tomorrow. So that is one important thing. And apart from that, if you look at Indian market, now there are a lot of news which is coming about Adani. In fact, the head of GQG Consultants, which invested 15,000 crores in the Adani group, has actually come out and told that they are very confident on the papers of Adani, the records of Adani, and they are, sure that this company can come back to track, and that's exactly why they are kind of rubbishing the reports given by Hindenburg, and they feel the market can go up. So if that happens, that's really good. Meanwhile, there was also a prepayment of almost 7,000 crores of loans by the Adani group over this holiday. So these are few things which kind of can bring back positivity to Indian market. Now, in this kind of situation, one important thing is that the Adani Group, once it is paid off this money, Adani Group will see more confidence from investors, and that could make sure the market doesn't fall much for the Adani Group. But then this could be a positive sign. That means to help Indian market not fall further. So if you see, even the last entire, just before the rally, there was 10 days of selling in Indian market, majorly because of Adani Group. And we have actually underperformed in the global markets. Now, when the global markets had performed, we did not perform, and now the global markets are falling. So that means we don't have to fall so much because we are still much below the race with the global markets. So right now, what I feel is, even though market may open gap down, we might see some initial sell-off, but then probably we should see some consolidation and close within 17,500 levels for the day. So that's what I'm expecting. Let's see. Like I always say, we can never predict the market, but only anticipate, because stock market is the only place where every time it makes even there's no expert in the stock market. So anybody can only share their experience in the stock market. And stock market is one place where if somebody claims to be an expert and gives out a prediction, it will definitely make sure that that person is failed by the stock market. So definitely this is what we do. We only anticipate about the market and not predict the market. So with that, I'm expecting the market to kind of close between 7,500 and 7,800. Let us see how the day goes. So that's it for today. Tomorrow is the expiry. The volatility is definitely going to continue. So it's of course of late has been very difficult for traders on this market. The way the market has been really choppy. So if you look at 2 days back, the market was so bullish that it kept going up and up and up, trapping all the traders on the higher side. Now suddenly it has turned bearish, and now it's going to trap the traders on the downside. So overall, it is a very choppy market, and markets have kind of been very terrible for traders. But for an investor, definitely this is an opportunity where we can invest, because at each fall, you get an opportunity to invest into good stocks. So let's see how the fall continues today and how long will it fall. I don't think it will fall for too long, because Indian markets major problem looks like kind of it is temporarily on a halt, that is Adani Group, and US Federal Reserve problems are something that we can react to little lower than the global markets. So let's see. With that, looking forward to a great day. This is Srikanth Rajan signing off until we catch up tomorrow morning. Goodbye. Have a great day.